might have been this last week. So they gotta make up.
This is fine now.
Who? Video? So that so they can wait on the class? Yeah.
Okay, good afternoon all. I think this is my second time here, so I think most of you would have known who I am. This pull-out sheet, would you guys fill the sheet, please? This is one of 2 or 3 parts, maybe 2 parts of the VAT portion, I guess, of the program. The portion I'll be doing is the quantitative portion more specifically, and John Roll would be doing the legislative portion, or the legal portion, I should say. Okay, as it opposed to the legislation that they currently have in place. Now, the legislation that they currently have in place, as he would say, it's the portion that what they've released is really a draft, and so all of the documents that you see in circulation is a draft, and then they will be, if I may say, make an adjustment to the draft itself, simply because one, the figure that they proposed to work with.
Everything okay? Sorry.
Yeah, I just called you.
Yeah.
I said you are. So we went to the inside.
Yeah, that makes sense.
And you put in that link there. Okay, sure, that's not wrong. Yeah, I'll print the whole thing. We push those, well, right?
Thank you.
No wrong.
So I rather let me say.
Yeah, and so they will be, as I guess John would say there, they will have to make some further adjustments. Here again, I don't want to get into politics, but if others administration were in place, I think they would have just gone with it. Yes, ma'am.
I'm so sorry, with the changes, I'm not too sure whether you're privy to it, but will they be so drastic from what the draft is now?
I couldn't tell because the coalition, I don't know what they are presenting in its entirety. I will have to have their document, read their document to make a comparison between the government and then not. I don't think the government's just going to say, okay, this is your document, I'm going to make your document law. So there will be, I'll take this, we won't do that. I think there'll be more of that than anything else. So I don't know what's going to happen in the negotiation stage.
Well, the reason why I was asking is if it makes sense to study what we have now or not. If I said what
Well,
we have
the structure of it will still be the same, mind you. Things like the rate and stuff will change. What's going to be exempted maybe change. What's going to be what is called zero base percentage, may change. All of these kinds of things. But as in tax, it changes every year anyway. Every year when the government does a budget, the percentages changed for a number of goods. See what I'm saying? So even if you went and you studied the custom brokerage exam itself, this year, you still have to restudy it for next year to see what has changed and things like that. So, but that's the way tax is, not just here, but in the U.S. and all of those other places. What really happens is that every time you see the government presents a budget, that budget is indicative of what the taxes they propose to present, the different rates, how much they think that they will sell. Some things will now be exempt, so that's no longer included in the extrapolation of the revenue projection. So it changes anyway. Okay. So it's not where it's a situation where, okay, I've learned this, boom.
That's it. No, it's a constant.
No, it will constantly change. Okay, so with that said, tax, value-added tax. Where did value-added tax come from? Make sure this is not this. The value-added tax came from, or tax in general comes from war. War is expensive, and so when it's time to finance the war, the government needs money. And so in those instances, that's when the government decides that, hey, to raise taxes or to raise money, we need to develop some kind of tax to finance this war. Value-added tax really started in Germany back in the time of the World War II, when the government needed to collect money to finance the war back in those times. And so, what is value-added tax? Now, we'll have to make sure that we understand the distinction between value-added tax and sales tax. They may appear to be the same, but they are not the same. Okay? Value-added tax affect the actual chain of processes or processes of the goods that finally ends up on the shelf. Of course, the consumer is the one who ends up bearing the total bulk of the taxes, right? But it's not only the consumer who pays tax during the process. And I want to explain this before we get into it so you will better understand. In the process of goods itself, let's say if we look at the Bahamas, we have the wholesalers. Do we agree? Then we have the retailers, and then we have the customers. Okay? At the end of the day, this group here will be the one who really bears the bulk of the tax. In sales tax, this is the only group that is really affected. Why? Whatever the good is, you may say, for instance, you go to the United States and you purchase something. They said, okay, you purchased this for $100, we charge 6.75% sales tax, and so you know now your purchases is going to cost you in total $106.75. In value-added tax, in each particular stage, and notice we said value-added tax, and I'm saying stage, because at some point here you may have manufacturers, for instance, if you look, for instance, in the United States. And for instance, name something that we make here. Do we still make BB tomato paste and BB peas and stuff like that? Okay, so they will be production individuals, right? And so then they will sell to the wholesalers, and then they will sell to the retailers, and of course, evidently there are economic reasons why they wouldn't really sell directly to the retailer unless the retailer is buying in such bulk. But they allow someone else to manage that for them. Okay. And so that's with regards to production in itself. But these guys here, they will have to buy their products. Agreed? And so when they buy their products, depending on, for instance, they buy from the makers of BB tomato paste or whatever, right? They will pay a tax on that. These guys here will also pay a tax. And then these guys here will also pay a tax. But so how does it work? In its most simplest form, taking away all of the other things, let's say that these guys in paying tax, they pay $4 taxes. Agreed? So when they sell their product to this individual here, they sell their product for this individual for $6. Do we agree? So what happens with this individual here, or this individual here? What they do is they now collect they're $4 and it's really only a $2 tax. When these guys sell to these guys, say they sell and they have a tax on it, say of $10, these guys here will collect their $6 and really, what is it? It's really only, not $6, they will collect their $2, I should say, okay? Because it's $2 really what they would have really paid. So they collect their $2, right? And so after they collect their $2 and then it's $4, and so you will have the 4 plus the 2 plus the 4. Now I'm trying to explain this in its simplest term. In other words, when we are looking at this value-added tax, this is not something to really joke about in terms of simplicity, because individuals are going to need to understand this process. As you sell, other than these guys here, as you sell, you collect your tax back, whatever you paid on this, if you are early in the chain. Okay, so at the end of the day, these guys, they pay no tax. At the end of the day, these guys, they pay no tax. These are the guys who pays the tax. So the question is now, if you look in the newspaper, you will see Mr. Rupert Roberts, and if you go to Mr. Rupert Roberts' store, you will see tax and value-added tax will make goods more expensive. Do you see that? Okay. So why, if Mr. Rupert Roberts is a retailer, why is he having all of this rah-rah about taxes? Pardon? It will reduce his profit margin, but not only does it, when you say reduce his profit margin, in which way?
Because if he can't price his, he would not want to price himself out of the market.
He will not, but everyone will, the pricing or the taxes are going to affect everyone in the same way.
If I were a retailer, I would be concerned about a cash flow issue.
You will be concerned about a cash flow issue,
They have to pay
okay?
that money right away and then wait for a credit.
Pardon?
They have to pay the money up front, the taxes up front, and wait to receive a credit from government only after the items are sold, or until a time period they give you that if the items are not sold, I guess you can still go and get the credit. But it would be a cash flow issue for me to have to come up with that tax before I can actually charge it to my customers.
Okay,
Yeah.
alrighty.
What's the total VAT tax in that change? $4.
Well, I said this is just, I'll just use the
I mean, in that example.
The total VAT tax in this chain, total VAT tax would be $10.
$10.
Six.
$10.
It's 2.
4, 2, and 4, because this guy's were 4, they sold at 6, and then this guy sold at 10.
Okay, he is the wholesaler.
He's the wholesaler who pays 4, right?
Pays $4 VAT.
Yes.
Oh, okay, that's the tax he's paying, okay.
Yes, and so when he sells, the tax to this guy is $6, but he gets his 4 back, right?
So he got
When
a
sells-
$2 profit.
It's not a profit.
To cover his
It's-
costs.
no, he has an additional to the government in the process. That's why I say, no, it's a value added. As it moves on in the chain, the government gets more money.
Oh.
So the wholesaler pays the government $4.
The wholesaler pays the government $4.
The retailer pays.
The retailer pays the government $6, but in actuality, the retailer is only paying a $2 surcharge on his goods, right? And then the consumer, the customer, is eventually charged $10.
So question, so the government gets $4, $6, and $10.
No.
Well,
That's
at the end of in increments though, it gets 4 from here,
Right.
4 from here, 2 from here,
Okay, right.
and then 4 from here in increments. So the problem is now, guess what? You're a businessman, say for instance someone like Super Value, you need accountants to do this for you. You have a whole other department that you have to establish.
And so that's
The overhead is going to definitely.
The overhead is going to increase, and then your margin is also decreasing. Okay, thanks. Okay, so your profit margin is decreasing.
demand's dropping.
Pardon?
No, the demand's dropping.
Well, demand will certainly drop, but I think if we look at demand, I think not only will demand drop, but supply will drop.
Yeah.
And so there's a possibility of would be a shrinking economy.
Is it likely for then the wholesaler to provide the sales direction to the customer?
How would the wholesaler manage that? See, what if you understand, say marketing, do you know that in many instances, the wholesaler stocks the shelves of their product.
Yeah.
Yeah, so I've seen that now. I've seen
crap.
that now, yeah.
Okay? And so, it says, how does the wholesaler now get to the customer? If you look at wholesaler, let's say Asa H. Pritchard,
Right.
it has how many locations? Rupert Roberts have how many locations?
So
11.
11.
Actually, it was 111 right now, and then he closed
Yeah,
down, so it should be 13 now,
Yeah.
actually. Maybe even more than 13, because then he took over Super. So
Yeah,
it's probably about 14
14.
now. Yes, about 14 locations. And so do you think Asa H. Pritchard could get to the customer like Rupert Roberts?
No.
So it's cheaper for him to stock.
You see what I'm saying? No, so not only that now, if Asa H. Pritchard want to get directly to the customers, what it needs? It needs cashiers.
It needs what?
Cashiers.
Cashiers.
Do we agree? But the problem is now, Asa H. product only sells a limited amount of product, while Rupert Roberts sells a wide variety of products.
What they do it online?
Let me ask you a question. You're leaving at work, you're leaving from home from work, and you need some baby milk. How you going to manage that online? You get the idea. They only have one location. You can imagine that line that's going to be there. You got the idea?
Yeah.
Okay, let's look at it. Chelsea's Choice. I don't know if you recall, I don't know if they still do that, but I know they stopped it at some point.
They finally figured that.
Chelsea's Choice, you used to be able to go there on Saturdays and get your water.
Yeah.
Could you still do that?
Yeah, I think they fixed that
They
problem.
fixed the problem, but you see,
You know, the line used to be round, yeah, they fixed that
it was
problem.
a serious
It's
problem.
easier to get in and out now, yeah. They changed the process.
Okay, so
Yeah.
these are the kind of things you have to worry about. Now, Asa H. Pritchard, what they have done, it's about niche. They have their niche in terms of, okay, we know how to get products at a reasonable price. Okay? Rupert Roberts I know how to distribute.
Okay.
You see what I'm saying? And I have the various locations to do this. Okay? And so this is some of the problems that you find that we will be experiencing. And so with that backdrop now, let's move into this. This is a handout. We're not going to do everything now. Let me say this. This class is not going to be very long, and I think McGill, we understand that. He told me that he don't think it's going to be very long. I wanted some more information, but no fact that I didn't print something because I left for some reason some stuff at home. But this is what I would have sent to him. Sorry.
Could you take just one more minute on that
Okay.
example? Because I need to make sure I understand it.
Now, let me say this. This is just something I made up out of my head. So
I know.
But
But in terms of,
it,
what's
okay.
being transferred to the government and what's being
Was
transferred
transferred to the government.
along
Okay.
the chain.
This we're saying these guys here, the wholesalers, they are evidently the individuals.
So when Asa H. Pritchard imports his stuff, he pays.
Who I didn't include was in here. I don't know if you were here earlier. Was the manufacturers. Do we agree? So they have to buy. These guys must buy from them.
Right.
Do we agree?
Yes.
And so when they buy from them, what happens? These guys are going to charge them a tax. That tax is really $4. Do we agree?
Yes.
But you remember, value-added tax is based on who? The consumers. Consumers, right? Notice it's value-added. So as we say value-added, as it moves through the chain, taxes are added on. The individuals who bought the tax earlier collect their tax back. Okay? So they pay tax here of $4 to these guys. Do we agree?
So the manufacturer pays nothing.
Well, the manufacturer, this chain goes on and on and on. The manufacturers, they're going to pay for their inputs. So if we can move up here.
Yeah, where would you get that from?
The raw material.
The raw materials, the raw materials going to come from a number of places. And earlier, I don't know if you were here, we were talking about BB tomato base and BB peas as a manufacturer in the Bahamas. Okay? They have to buy their peas from somewhere. Agree? They have to buy their tomatoes from somewhere. Now, if you notice, it's a cycle. Because who they eventually buy it from evidently becomes a consumer. Okay? So when they buy their peas and their tomatoes from the farm or whatever, they have to pay the farmer tax. Because why? When the farmer sells, the farmer has to now pay taxes for whatever he sells.
gotta take the receipts.
But he got paid for the seeds, but he's paying on the sales that he would make.
Okay.
And so these guys, so they were charged a $4 tax on it. And so in other words, let's say the goods cost $100, you'll add $4, which will come to now $104.
Right, okay.
Okay? So they sell now to these guys, right? Now remember, it's based on sales. When they sell to these guys, you remember there's what is called a what? A markup?
Right.
So, in its most simplest term, 100 times, let's say 15% is equal to $15. But 1,000 times 15% is equal 150. My point is that as you move through the chain, the price of the goods increases. So as the price of goods increase, the taxes that you pay is going to increase. Okay?
It's a percent times.
And percent times the actual sales. So we're saying it increases, right? So these guys, now they've increased, but we're saying right now, so at the end of the day, their total price to these guys include $6 of taxes. Okay? Including $6 of taxes, these guys now take their $4 back, right? Remember now they sell it to these guys. These guys are going to pay them what? $6, do we agree?
Right.
And so when they pay $6, these guys are going to submit to the government how much? No,
No, $2.
$2.
Who do you mean, the wholesaler?
The wholesaler,
Yes,
he's only submitting
yes.
$2 to the government.
I got you. All right.
Why? Because he has to get his taxes back.
He gets his credit back.
Okay, I thought the government had to give him back their credit.
No.
That's money you never really get back. It's just.
No, we were talking about
credit.
control accounts where you see instances where the control accounts, depending on if it's debits and credits, and in its narrative term, debits being receivable, credits being payable. You'll see that in the control accounts also. Okay? And so, you get the idea now of what's happening here. So when these guys go, this what? $10. Do we agree? So how much do they get back? They get $6 back because they paid these guys $6. How much must they now submit to the government? Just $4.
So the markup is what they're really submitting.
The markup will indicate what the increases in taxes is. Let's say that it was flat. No, evidently individuals wouldn't be in business if they're down further the chain, right? Or up further the chain. If it was flat, then you wouldn't have this increase in taxes, right? But as the value of the goods
Taxes are
increases,
being charged on the cost plus the markup, right? Times.
well, yeah, cost
Yeah.
plus the markup, which is equal to the sales price.
Yeah.
Okay. All right. All right. Make sense, huh? Okay. So, on that issue,
The markup would be the value added tax percentage rate.
the markup, no, the markup is the money the guy is actually making to be in business.
Oh, okay, all right.
Because he has, like she said, it's the sales price which is equal to cost plus the markup. But then, as you'll see, this is why there's going to be a problem here to some extent. Because the question is now, your markup with me used to be 25%, may now have to go to 15%.
If you want to maintain,
If you want to maintain.
yes.
Maintain the customer.
To maintain the customer. You see, and the thing is, what the Haymans need to understand, evidently we know taxes need to come. Do we agree? The question is now, do you want value-added tax or do you want income taxes? Do you want value-added tax or do you want income taxes? The thing about this value-added tax is that, guess what? Let's say that can of peas, I may decide, you know what? I will save my money, I don't need no peas with my rice.
Yeah, so why is
I don't know what my backyard farming is.
Pardon?
My own little thing.
I didn't hear you?
So then this one is based on if you consume something.
This is on what you consume.
You don't have to pay it.
You don't have to pay it. If you don't buy, you don't pay. But if you get your income
Retailer still has
taxes,
to pay.
Who?
The retailer still has to pay it.
no, we're talking about purchasing now. We're
Yes,
talking
Yeah, I
about
know, the
side.
consumer doesn't have to pay it if they
No,
don't buy
the
it,
retailer
right?
doesn't have to pay.
Right.
But hold on. Let's say, name a product now. Mayonnaise. Mayonnaise. Most Bahamians buy Hellman mayonnaise. Do we agree?
Yes.
there are some disgusting tasting mayonnaise on the market.
Yes.
Do we agree?
Yes.
Now,
That little fat one.
is the retailer gonna stock his shelf with more Hellman mayonnaise or the disgusting mayonnaise? Hellman. So it's the same thing. When people stop buying,
They stop stocking.
they stop stocking.
Okay. And certain stuff you have to buy.
Certain stuff you have to buy, but guess what? Instead of buying that 4 can of peas, or that 4 can of cream, you decide you're gonna buy 2 or 1, and you decide you're gonna mix water with that. You see what I'm saying? So what's gonna happen is your consumption pattern could change, and you can maintain your financial situation, but not necessarily your, how do I put it, your status situation.
Right.
Because you used to say the finer stuff, and you now realize, you know what? I'm not gonna shop at A anymore. I'm now gonna shop at B, right? Because A is more expensive for my appetite. It's too expensive for my appetite. So no, the key thing is that this is a consumption tax. If you consume nothing, you pay nothing. I don't know if you guys heard this, but this was about 30 years ago. There was a Creole, a Haitian gentleman who died of hunger. And it was determined that he died of hunger. But they found $100 in his pocket. Literally.
That is crazy.
So, I'm just telling you, in terms of consumption, how people's pattern change. They decide, I'm not going to spend my money on that.
Probably the most right place.
Stop, then you
No, you want to decide where you're going to spend your money is more valuable.
Well, but his decision meant
Because you're
nothing.
hungry, not because you
His decision meant nothing. So he put nothing in the treasury, but he also put nothing in him.
That's right.
So he was all about nothing. So, like I said, you can make better decisions when it comes to consumption. The key thing is for the government to get the rate right. That's the key thing. Now, in our example here, we'll be using 14%. Okay? In these examples here, as the value-added tax percentage. Okay, and so VAT stands for value-added tax. Value-added is levied on the supply of goods and services by vendors, or it is a tax businesses charge when they supply their goods and services. We have to pay tax on most things we buy, even though we do not see it. If you buy your peas from Rupert Roberts now, you pay taxes on that. You agree? Well, let me not say peas. Let me say pampers. We know we don't make them here. Okay? So when you buy your pampers, you pay a tax on that. Will you pay the tax? Well, maybe pampers not good, because I think pampers is duty free. Okay? But anyway, when you buy, for instance, meat, when you buy meat, and you bring that in, there's a duty on that, right? That duty itself is a tax. The problem is, now, if it is a tax, why is there a problem with the duty? Anyway, why is it a problem with the duty? In terms of it being used as a standard means of taxation.
It's not efficient enough, too many. It's a whole thing, basically.
Well, okay, inefficient it may be, but the problem is that what does it do? It doesn't encourage trade.
Oh, yeah, it's prohibited. Yeah.
It's a prohibitive tax. It doesn't encourage trade. So if you're taxing my products to come in your country, that's going to do what? Reduce the potential trade that can occur between you and I. And so that is one of the major problems with the duty. And so, let's get into some definitions right now. Zero-rated items. Zero-rated items are goods and services that are taxed at a rate of 0. Example, milk, brown bread, maize, fruits, and things. Why? Because government consider these things essential. Okay? Now this is just a scenario I'm using, not necessarily to fit, like I said, the Bahamas. The reason being is because they're continually making adjustments to the actual tax law itself. But so you will have items that will be there on the, or part of the system that will be zero rated. And then we have VAT exempt items. These items involve services that are not subject to VAT at either the standard rate or the zero rate. Example, childcare services and educational services. You can imagine paying taxes on St. Andrew's school fee, 15%, or even on QC and SAC. Right now, SAC is, what, about $1,400 a term?
No.
How much is it? I thought you know. No, I have a son go there now, I pay about $1,400. That's just tuition. And so imagine 15% on that. And people are crying now. And it's not just 15% on that $1,400, because it's 3 times a year. Do you agree?
And that's not even books. That's not even clothing.
That's not even books. Okay. And so we have a standard rate. For instance, in South Africa, the standard rate supplies are taxed at a rate of 14%. Now, the rate that the government has been tossing around is 15%, 17.5%. The problem is that imagine the tax rate that the hotel pays now. Imagine there's an additional 15% on that. You got a problem. Are they going to move the hotel rates that exist now? Thinking about it.
Do it on a room rate. Oh, no. They can take room rates out.
So these are all things that the government needs to work out. So we have valuable items, sorry. These items are goods and services that are subject to the VAT taxes. For instance, an item like something I consume a lot, alcohol. There will definitely be a tax on that. Now, let's move to an item like cigarette. Cigarette is taxed very, very high in the Bahamas. Right? Of course, I know persons who make tens of thousands of dollars in the black market on cigarettes. Believe you me. I've seen persons out of their deal, they got $30,000 easy. Just on cigarettes, especially rockets. Okay. So, what's the problem here? Well, let's look at an item like gasoline. The government gets 66 cents on each gallon of gasoline. Is there going to be another 15% on the $5 sum you pay now? Here's the problem. And so, I don't know. And so, we have what is called VAT output. And so I'd like you at some point to focus on what we have on the board. It says VAT paid on items purchased and can be what? Claim back. Now that, the SARS I have there, you can put the treasury there, or finance. Yes. So then you would have paid, no, this is an output. You would have paid taxes on this, right? But you can claim this back from the government depending on where you are in the chain. And so, it is VAT which your company would charge on items, that is, which it sells. Thus, the company could wish to sell an item and add it to the amount of the standard tax rate would be charged. And so when they sell the item, for instance here, when they sell it, note that they would sell it including a $6 VAT. Agree? They get their $4 back. Okay? And then we have the VAT input. That is VAT on sales and income, and must be paid over to the treasury. It is VAT that you pay on all your purchases, all your business expense that is, and for which you have a tax invoice. It also relates to VAT that is paid on other goods and services bought or rented for the business. For instance, the young lady asks someone, did you put VAT? For those of you who have apartments on rent, are you going to be paying VAT on those? And so there again.
No. I told them all that. They said, they said express fees. exempted in the, anyway, I thought,
And what did they tell you?
no, because I was looking at Brian.
You were looking at buying an apartment, okay. So what did they say about the real property taxes on that?
I know that's high, it said VAT won't be charged on real estate. It's expressly stated in the,
But we're not, we use, real estate is one thing. We're talking about the rent from the real estate now.
right,
That's revenues that you have received. Not VAT on the purchase of the real estate, but VAT on the revenue of the real estate. It's two different things. Because for instance, I think what they're talking about is that, okay, and Mr. Rule can tell you when he comes next week. Your good costs, the property costs 100,000, but they put VAT on it, and VAT is 15%, now it's 115,000. Okay? That itself would be a problem. Okay, and then we have the VAT control. That is a summary on VAT input and output and shows whether a business owes the Treasury money or whether the Treasury owes the business money. And so how to add VAT. And so in that instance, move from that for a bit. Everyone has this? So, so calculating the total price, that is including VAT. How many of you have math phobias? Who's that? You do? Yeah, because I find that when people see certain things, they're like, okay, what is that talking? And sometimes it's very simple, but they just have this phobia. So we have the total price of output including VAT is given by the total price, which is even the price, times 1 plus VAT. Does everyone understand what that means? Okay? And so in other words, if your price is $200, right? And VAT is, let's say, 15%. So you will have 1 plus 15. The 1 being 200, right? Okay, and the 15. Okay, now, since VAT is a percentage, it must be written as a decimal in the formula. For instance, the VAT for UK, which is 20%, must be written as 0.2 in the formula. Example, the price of a product is £400, excluding VAT. What is the price when the customer buys it in the shop? That is, VAT is equal to 20%. So the total price will be the price times 1 plus VAT, which will be equal to $400. And so therefore, 400 times 1 plus 0.2, which is equal to 4 times 1.2, which is equal to $480. Does everyone get that? Okay. Now, calculating, but note that the first one was calculating the price including VAT. Calculating the price excluding VAT is what we will now look at. For instance, I don't know how many of you shop in the UK? You used to. There's some lawyers here who shop in the UK also, right? Do you realize if you order online, your goods are cheaper if you let them ship it to the Bahamas?
Say that again?
If you order online, your goods are cheaper because it's coming out of the country. And so if once it's coming out of the country, they cannot charge you VAT. Remember now, VAT is what kind of tax? It's a consumption tax. Consumption for the individuals who are there.
Also, online is going to be the way.
Not the way, well, I mean,
I mean,
if
if
you-
you can't, for most of things, but perishable.
well, that wouldn't be for you here in the Bahamas.
Yeah.
But I'm saying if you order in and the goods are going out of the country, then you don't pay VAT on those goods.
So you're saying if I'm in the UK and I'm ordering from the Bahamas or vice versa?
If you were in the Bahamas, and, okay, if you know, okay, for instance, let me give you an example. Give me a second, please. Sorry. If you know where you shop, in the UK. Say you shop at Harrods,
Alright,
right? And you know what you want. They normally have it online.
Yeah.
If you walk in the store that says a $400 dress,
I got you.
you can really get that dress for $300
Got
if you buy it online and let them ship it to the world. Now, if you still ship it in the UK, you still say the same, you still pay the same price as in
you. I got you.
the store. So,
I got you.
okay, so calculating the price excluding the VAT. So the price, which is the price of the product, which is excluding the VAT given, which is equal to total price divided by 1 plus the VAT. And so, at this point, that will give you the amount, the price. Example, the price of a product is 480 bahts, or pounds, or however you want to look at it in the shop. What is the price without the VAT? And so you'll take the total price, which is 480, divided by 1 plus 0.2. And that will give you $400, which is the price without the VAT. Okay, next, calculating the amount of the VAT itself. The amount of VAT is given by the VAT amount, which is equal to the price times VAT. And so, you say whatever the price is. The price is $400. Do you agree? Times the percentage of VAT, which is
20%, 0.2.
0.20. And in this case, this will give you 480, right? With 400, and this will now give you 80 bucks. Okay, so just for your edification, I have here a list of, at the back, a list of VAT in some other countries. The standard VAT, for instance, in Australia is 10%, in Belgium is 21%, Bulgaria 20%, in Ireland it's 25.5%, in Ireland it's 23%, in Greece it's 23%, in Finland it's 24%, in Sweden it's 25%, in Hungary it's 27%.
What's the standard rate in Caribbean?
The standard rate in the Caribbean is about somewhere between 15 to 17%. Now, let me say this to you. Taxing in a country affects the standard of living in that country. Taxing in a country affects the standard of living in that country. Some of the countries with the best living in terms of standard of living are those same countries within that European region, like Sweden and Norway and all of those countries. They are known as the better countries to be in. People who have less stress, very high standard of living. Okay. So in that regard, now let's go through this and let's do a series of examples back to this. So, how to add value, that is value added tax to a price that is 14%. This is the calculation you need to use when you know the price before the tax, that is the net price, but want to find the price after the tax. And so the net price, which is multiplied by 1.14, will give you the gross price. In this instance, the gross price for this item will be $480. The price before the tax, that is the price before the tax multiplied by 1.14 is equal to the price after the tax, because the gross price includes the price after the tax. Do you agree? Because it will be the price of the product plus the tax itself. One and the same, in other words. And so the calculations, the VAT standard rate is 14%. First you get the multiplier. What is the multiplier? The multiplier is 14% divided by, or 14 divided by 100%, which is equal to 0.14. You always want to use points. Be careful not to use percentages, especially when you go to those calculators. Those percentages in the calculators will drive you crazy.
Yeah.
Because what happens, once you do the point will always state you correctly. When you start going to the calculator and you press percentage, sometimes you find that you are moving the decimal points further because you already included it. So you should always use points. And so, which is equal to 0.14, and so 0.14 plus 1 is equal to 1.14, as you saw they used in the other examples where we had 1.2. Okay? And so the multiplier in this case is what? 1.4. Now everyone understands with the 1, right? The 1 is really the price of the good itself, right? Not the gross price, but the price of the good itself, right? And so that good times, okay. And so the net price, which is multiplied by 1.14, which is equal to gross price. The price before the tax, that is the net price, which is multiplied by 1.14, equal to the price after the tax on the gross. An example, and so we have R100, which is multiplied by 1.14, is equal now to 114. R100 plus the tax, which is also equal to 114. So you get that by now. And so how to deduct VAT from price? That is minus 14%. So people can often add VAT to a figure, but when it comes to taking it off, it is a problem. In other words, I misinput VAT on this, now how do I take it off? And that's going to be some of the problems when you go to these machines and they like, because the VAT is going to be included on the machine. And there again, the IT people will be making plenty money. The accounting people, spending them, they can be enjoying them, they can be making plenty money. You know, people will need them to manage their system, especially managing this control account. Control account is where the problem is going to be. The thing is that ever try this? If you just go away your money and you just buy, maybe for men and women, you just buy, you watching your money, okay, maybe you keep counting your money, see how much money you have there. Do you agree? When you have to do an accounting for that, that's a problem. Because you gotta, when you have to account for every penny, one, you gotta remember to account for it. Okay? And why do I say this? When people have a way of doing business, as in most businesses in the Bahamas, they just make the decision like that, okay, take this off it then. The problem is when you start to take it off, you gotta account for what you take off. And so this is the problem, it now has to be in the system. And let's say it's a big ticket item. If the individuals who come to your store are smart, they will determine that there's a problem here. There's a void here. Because this control account is going to be able to tell them how much you should have paid. Your checkbook will tell them how much you actually paid. And now, here you have a problem. And so the question is now, well, every year you have certain items that are exempt or certain items that may be zero base. So you have to go to your system every year and update your system. And so when you update your system now, you again have a problem. Not only that, based on the inventory that you have there, because there are very few companies that really do inventory properly and sufficient enough periodically. Sufficient enough. I don't know if usually when you go in Super Value, there's some guys or people you see there with these things in their hand, they're doing inventory. And they're not a part of Super Value. They are, it's like an independent company that does it. And when they key certain in, then they go and they put it in the system and everything is connected. But that's a cost in itself. But with this now, you're going to have to do periodic inventory system. Periodic inventory accounting. The reason being because we're going to have to prove to the government what you actually have in inventory. Okay. And then they're going to be looking at your sales. Your sales are going to have to be computerized. You're going to have computerization. Not everyone has a point of sale. They have cashes. But not everyone has a point of sales. And so here again, you have a problem. Okay, and so calculation, the VAT standard rate is 14%. Where was I? Okay, how to deduct? And so here it is. Taking off VAT tax from a price. This is the calculation you need to use when you know the price after tax, that is the gross price, but want to find the price before the tax. Does everyone understand that? You know the price after because you know, okay, it's 480, but how do you know what the price was before? And so, the VAT, which is 14%, the gross price, which is after tax, is divided by the 1.4, which will give us the net price, like we did over here. Okay? In other words, there are basically two forms of progression. Either you're going to multiply or you're going to divide. If you want the higher figure, you multiply. The higher figure will include the VAT. If you want the lesser figure, you need to divide. But you must be dividing the higher figure. Okay? Okay. And so we come back to getting our divisor, which is the 0.4, moving on back on to the divisor of the 1.4. And so the gross price divided by 1.4 is equal to the net price. And so the price that is after tax divided by 1.4, which is equal to the price before the tax. So when we say the price after tax, we mean the gross also. Okay? And so in this example, we have R, 114, divide by 1.14, which will bring us to R is equal to 100. And the same thing where we say R 1.4 in tax. Work with that portion there. And so let's move on to this portion here that you guys are going to have to, this is going to be the more challenging portion right here. The 3 bookkeeping accounts. For the purpose of value-added tax record, 3 bookkeeping accounts must be kept. 1, the VAT on input accounts. 2, the VAT on output transactions. And 3, the VAT control, that is a debit and credit account. Now, do you remember the input accounts? And do you remember the output accounts? You remember the input accounts would be the accounts at the end of and the output accounts would be the accounts in the process, those individuals who will be getting money back from the actual government, okay, or taking their money back. And so value added tax on inputs accounts. And this account is usually shown a debit, that is VAT for the treasuries, the VAT, that is SARS, owes you money for the VAT you have paid, and you are now entitled to receive. These individuals have paid this money to the government, do we agree? And now they're entitled to receive this money back. Now, you just can't go paying money and now say you're taking your money out, and that must be accounted for in this account here. Then we have the VAT on output. This is the account. This account will usually show a credit, that is VAT treasuries are entitled to receive the VAT from you when you have collected on their behalf. The money is not yours, and it is only temporary in your possession until the due date for payment of the VAT. Okay, as you know, I don't know which date they're going to use, right? But normally they will tell you, okay, within 60 days we want our money. And so here again is going to be another problem that individual have. Cash flow. How do you now pay? How do you now know which of this cash is yours and which of this cash is the government? Someone is going to need to be managing that. Because when it's time to pay and you are unable to pay, what do you think is going to happen? Not locked up. They're going to charge you a late fee. Or they will be charged, I don't know if they're going to go to interest, because then the situation even gets more complex. Okay. A lot of people going to show in the court. And then we have the VAT control account, and this is a debit and credit account. This is the account to which the 2 first accounts are posted. The account balance may show credit, then the periodic reports to the VAT is for a payment to be made, or it may show a debit when the periodic report shows that the money is to be returned. And so if you turn to the next page, and you can put where you see the SAR, you can put the treasury there. And you can see now we have the wholesaler, we have the retailer, and then we have the consumer. Okay? And so the wholesaler, it has sales, and it has VAT output in its selling price. The retailer, it has sales, it has purchases that it would have made, right? It has VAT input and it has purchase. But it also has sales and it has VAT output. Does everyone understand this now? You remember this? You remember the guys at the top, which would be the wholesalers? You remember they only, say for instance, if that was the starting point, they only had the VAT output? You remember that? But when they sell to the other guy, he got output and then, remember he had 6, right? And so he had 6, which was part of what you would pay, and then what he was now passed on. Okay, so now they have both of that. And then they have the consumer, which is equal to purchases, which is equal to VAT and the purchase price. And so, here we go again at the bottom where it says the wholesaler sells the product to a retailer at R100, and R, and you can say dollars or whatever you want to say, plus 14% of the VAT, which is $114, we may say. Now, the wholesaler collects VAT of $14 from the retailer and pays it over to the treasury, thus taking the VAT out of the business, that is VAT output. The retailer claims back the VAT, that is $14 from the treasury, and thus puts it back into the business, that is VAT input. And then we have the retailer adds a markup of 100% to the product and sell it to customers for $200 plus the VAT of $28. Because remember that VAT is based on consumption. So if the price goes up 200, then the VAT must go up. And here again, which may be a good thing.
Why?
Well, and Ruby Roberts can know I can't put my price that high.
Reduce the profit margin.
What you say? Huh?
That's
Well,
why.
I'm just saying Rupert Roberts, but I'm saying in general. Imagine buying tires. Imagine buying tires.
He's already.
So if you buying tires, the high-end guys go, what's going to happen? People are going to start to shop around.
Or
Buy tires.
importing them themselves.
Or importing them themselves. Or at that point, guess what happens in the economy? Other individuals realize that there's a void in the economy, for instance, for tires.
And there's a new business.
And then a new business comes because you know what? Those guys, if they're selling tires for 180, I think I can still sell it for 150 and
Hence,
still make a profit.
hence we have the Chinese.
We have the Chinese. Okay, and so these are the kind of things that can possibly come out of the VAT. And so, the retailer collects the VAT of $28 from the consumer and pays it over to the treasury, thus taking the VAT out of the business, that is VAT output. 6, the consumer cannot register for VAT and cannot claim back the VAT. Now, let me say something on this registration. If you go online, I don't know, they're taking it down there, I think, we'll put it back right now. There are 3 sets of legislation. It's just the general, VAT, and then there's a registration. So they have it legislated, how do you register? Now, why do you need to register? You need to register, one, because you got to pay the government money, but you need to register because you may need to get the money back. Okay? And so there are also legislation on that, which John should also tell you how that will work. Okay? Of course, as with everything, there are going to be some problems initially. I mean, come on. United States. United States, we agree it's a very successful company. Do we agree? They rolled out their healthcare. Healthcare.gov. You remember how many problems they had? Okay. Now, the question is, however, why did they have problems? You're on the right track, but when you say it wasn't tested properly, what do you mean?
as
But
far
you never had
as
a chance to go
the
live. When you
import-
go, you can do any testing until you actually go live. You tell people go
Yeah.
on the website and register.
And then the website.
It's a lot of
crashed.
applicants.
Yeah,
The
exactly.
volume.
At some point, it crashed.
It crashed also, there was a lot of applicants there, okay? What happens is that, let's say this, for those of you who, for instance, work in business, right? What really happens is that, say you have a new system, say a store like Google Roberts has 14 stores. What do? You introduce the system to one store first, see what's going to be the problem there, and then roll it out to the other stores. What should have happened is that they should have introduced it to one city first, one state first, see what happens there, and then roll it out to all the other states. So, here is the government now. It's want to introduce VAT, okay? Should you be introducing VAT in its entirety?
Or one sector at a time.
One sector or one industry at a time, or one locale at a time. Now the locale may be a little difficult, right? Simply because you can't do it in Freeport, because Freeport has major problems in terms of economically. You can't really do it in Eleuthera because Eleuthera wouldn't be a proper representation because of the size in comparison to Nassau. And so if you want to roll it out, probably the best place to probably do it is Abaco. The problem is that if you roll it out in Abaco, any of you bought a sandwich in Abaco recently from Wendy's? It's $12. 12 bucks. Would we pay $8 here for and $7 here for? They pay $12, $13 an hour.
Why? I mean, sorry.
I'm not a part of that business.
It's a franchise.
It's the cost to get the product there.
Yeah, it's a
It's a
franchise.
cost.
No, I'm not saying.
That's the problem with the franchise. It's the cost.
Same as in Nassau.
You don't have no
It's the
problem
same.
with no transportation.
It's the same.
That's the
Okay,
problem with the
so-
Tommy Island.
That's
So-
no,
so
that's
what-
Funky Joe's.
One of the best things that they probably should do is introduce it to a specific industry. Okay, now which industry would be best? They can determine better thing because they'll have more. The thing is that if they introduce it to an industry, the industry needs to be populationally representative as opposed to more.
Yeah, because we're gonna work in the food industry, will not work in the
Yeah.
retail, like Kelly's or
Yeah.
something.
So that's what they need. That's maybe one of the things that they need to do. Now, let me say this. The Treasury collects the VAT on the amount of the $28 instead of only on the $14 due to the value being added to the product in the form of the markup percentage. In other words, you put your price up, you pay more tax.
That's the problem right there.
What is that?
The markup.
The markup?
The markup.
Yeah, like I said, what is the right markup? Each industry is
That's what
different.
I'm saying. That's where the problem is.
That's where the problem gonna be is correct. But that's where I'm gonna tell you what's gonna happen in this economy. Give me a second. What's gonna happen in the economy is that's where we are gonna have a representation of a better economy. For instance, if you study economics, you know how hard it is to get a job in this country if you study economics?
There is no job.
But now, economics and qualifications like that, they will be in demand now. Because stores will need economists, industries will need economists to see, okay, how do we best deal with this situation? How do we best go and do our calculation in terms of what's the right markup? If we sell it for this price, what are we likely to get? That's where they're going to be using the Department of Statistics, central bank reports, and all of those things.
Economists or accountants?
Pardon?
Economists or accountants?
Both. And that's, go on.
Because even now, if you go to Kelly's and you bought those high power tools, they're much more at Kelly's than if you were to shop at CVS on Carmichael Road.
So then what?
Yeah, so Kelly's is definitely more expensive. I'm talking
Because they
maybe
probably,
15-20% more.
because they figure they have a brand that's known.
But not just
No,
the
no,
brand, you know,
I'm comparing brand for brand. I'm talking
it's
about
one location, it's location,
Wash.
and we're Kelly's.
Yeah.
Yeah, they pay more for their rent. I understand that, right? But still.
Thank you.
No, Okay.
I mean, the business
Okay.
doesn't pay, don't get me wrong, business
Business to
doesn't
pay,
pay.
because I think, yeah, you have to- that's your overhead. But
Business
it's
doesn't pay, but
okay,
you know.
forget about Kelly's then. CBS prices are less than AID.
Because we're just getting a.
Really?
If I shop locally, I shop around to see exactly where I'm gonna get my savings. And it's consistent. CBS is a good place to shop.
CVS is a
So, Mr. Richard, sorry, one
Yes.
question.
Yes.
If I'm a retailer
Yes, yes.
and I pay back to a wholesaler who's not registered,
Hold on.
okay, I'm a retailer
Uh-huh.
and I'm buying from a wholesaler who's not registered,
Mhm.
right? I'm paying VAT, right? Would the government accept that VAT? Or do I have to prove that the wholesaler is registered?
Well, evidently the thing is that there are probably two things here, David. I think the only thing you, as a business, will need to worry about is whether you paid your portion of taxes and whether you're not in cahoots with them. So if you're going to do business with them, make sure you write checks and what you're writing your checks for. You see what I'm saying? Now they have a whole new different issue. Now another thing, benefit of value-added tax. This is a very good question you raised. Value-added tax tells who's stealing and who's not stealing. Oh, you didn't know that, huh?
No, but.
How?
How?
So here you raise the point, if the wholesaler you buy from is not registered,
Right.
and you've shown that you paid this wholesaler,
Right.
and they can't show where they've paid the government, they need to give the government their money. See,
That's a
now remember now,
balance, yeah.
if you are a legitimate business, you're gonna make sure you do things by the book. So if someone's up early in the chain and they ain't doing things by the book, you paid them, you ain't got no problem dealing with them. Or worrying about whether or not they paid, you know you paid.
And they would be in the system by virtue of you paying. And
But they're not
that's a
necessarily gonna be,
tracking- I think that's a track.
they will come up as a result of the investigation. That, okay, you paid this person or this company monies for goods, products you bought from them. And we now go to look for this person for whom you bought this good for, and we don't have them registered. And we've seen no record for where they pay taxes. So now we gotta go after them, because you have collected taxes on my behalf. You've acted as an agent improperly for me, the government.
What if they didn't collect it and said, oh no, I put that, you don't have to pay VAT on that, we exempted or whatever.
Well, what's it again?
If,
For the retailer?
if the wholesaler didn't collect any VAT, they said,
But then you in the problem now.
Yeah.
because you bought an item and didn't pay the VAT,
Because you bought an item and didn't pay the VAT, and therefore you are defrauding the government of monies that you should be paying the government.
so I need to
Because when
either
you sell
find
that-
another wholesaler that is honestly charging VAT, or,
Not charging VAT as a registered, just that they're registered, or they're legitimate.
If you-
Listen, if a wholesaler comes to you, well, let me give you an example. And I'll go. One of the stupidest things I heard was when Bougie Banton went to jail.
For what?
What you can buy drugs, what you can do a drug deal with someone who you don't
No,
know.
no, that's right.
You will never see this person before in your life.
We're gonna do a deal.
And out of all of the rhetoric you hear in the market about these secret agents, why are you going to do a deal with them? So it was just way out there. Not only that, he knew that they were after him. They were after him from back in 85, 86, 87, when Shabba Ranks did that song. You remember the song? And then when he did the song, I should say, sorry, and they were after Shabba Ranks, they practically shut Shabba Ranks down when he sang that song, Boom Bye Bye, in the Backy Boy. I don't know if you remember that song.
Yeah.
They were after him from there. See, there's a faction especially in the U.S. and British society, between me and you, where these guys of certain sexual preferences, believe you me, they run the government. Believe you me. And so they've been trying to get him from there. They shut Shabba down after Shabba moved to the UK. But Buju Banton, he still continued to spend a lot of time in Jamaica.
Yeah, he's still living. Yeah.
Have you heard Shabba with any new songs?
I'm not saying anything.
If any.
No. So they know they were after him, right? But back to your situation. People don't approach you to do things unless they know you game, in many instances. Now, can you do it? Yeah, you can do it. The problem is that then you gotta do it with cash.
It's not doing a large scale, basically.
No, let me tell you the problems right now in terms of the government. We have to change a lot of laws. Let's say company is doing this big purchase, or retailer is doing this big purchase, say $50,000, $20,000. What you do with this $20,000? You keep it with you, or you can deposit it? Okay. So when you put it in the bank, now you have your normal cash transaction. For instance, you run your tape every evening, right? Or every week or whatever, and you're making your frequent deposits, right? And right now your deposits ain't matching up here. Because you know, the guys who come into your store, on your place of business, they're actually auditors. So they will be auditing your books. So now you gotta show where you get this cash from, because these are things they're looking for. Because that's what's gonna happen. I have a company that I do accounting for. No name's called. So a lot of his things he purchases in the States for cash, right? Simply because one, he's in the Bahamas, and no check-in and all this kind of thing, so he paid with credit card. So the guy, he walks in the place. I think, what was it now? The guy was selling it for, let's say the guy was selling it for $36. $36 was a good price. He decided, you know what? I want a better deal. So he says, I'm paying cash. Cash. 24. The price automatically go down. Why does it go down? Because they know all of that taxing and all of that things that they would normally have to pay on it. They don't have to pay that anymore. So once you start talking cash, so when you got to be comfortable with that person to really approach that person. Because there are some people who, the minute you begin to talk about that, they actually leave their store. And just hold on, I don't look at the business. Get out of my store. Okay, you got a question?
What about small businesses that they don't make over $100,000?
I think a number of them will be exempt. To some extent. The extent to which they'll be exempt, you'll have to talk to Roll on that.
But I mean, like the mom and pop store, we will have to go to a wholesaler. They will be charged by.
Yeah, they don't have to pay.
But then they can't charge up to the consumer because they don't make insurance. That's why they.
Well, that's the choice they're gonna have to make.
Just register. They should register.
You see what I'm saying? So,
They must liable for that.
yeah, that's.
But they won't get a credit back because they're not registered.
So you see what I'm talking about? What happens is that when that comes into play, the whole economy changes. We're gonna have it's gonna require an honest economy. It's not gonna be perfect in terms of every one of the
Payments gonna find a loophole. Trust me.
to find a loophole, you need collusion.
Yes, you do. They gonna find that. They gonna find that. Trust me, they gonna find that. We're doing it now.
Soon to find that somebody can put a stop to that.
Yeah, let me tell you something. Bahamians is talk.
Thank you.
I can tell you this, and not only the Bahamians talk. Okay, you remember? You recall many years ago, the best place to buy lumber was where? No.
What do you mean, on paper?
No, the best place to buy lumber here in Nassau.
Not
money.
money.
Deans.
Deans. Oh, I remember Deans on the paper.
Right.
You remember Deans?
It's on Bar 20 corner.
Yeah, not bad. Corner or whatever. You remember that?
Is that number?
Oh, okay, all right.
You remember that?
Deans,
You
yeah.
remember that?
Oh, no. I thought you said numbers. I'm sorry.
That's why you say on the side of the road.
I remember they closed in now.
They closed Dean down, right?
Yeah.
Now, what happened?
Yeah.
Two things. Why did they close Dean down? And how was Dean able to have the lumber cheaper?
Because he was.
No, he had his own shipping company.
He owned it, yeah.
He had his own shipping company. He brought it in when he brought it on.
Two things. He had his own shipping company, but he cleared customs in Apico.
Smart boys.
So
How do people do that?
when
They come company I used to work for a long time ago, we used to clear customs and cat fees.
Yeah, but why do you think they would do that?
Because they pay the
No,
customs
they get
person off.
exemptions after the hurricane.
No,
Or they can
we
pay
used
off
to
the
pay the
customer.
people, we
There
didn't
were two
want.
things. There were exemptions after the hurricane, and what he did is he was saying, okay, I'm supplying the goods to these people there, but they were coming to Nassau.
They do that
Okay,
before,
and then in addition to that, the customs officer, they knew the goods weren't being offloaded.
Yeah. But they getting the cut.
You see what I'm saying? And so they're getting the cut. So what Hubert said
It's collusion.
is this: no, Mr. Brother, I want you to bring that goods to Nassau to be claimed, and he just stopped it. So think about it. How is it that if you claimed in one area, your business is successful,
Compared to
And
the
then-
with somewhere else.
and you come the other area is not successful? Because there was something funny going on. So what I'm saying is this: that was caught, and as you go through your tricks,
A lot of-
it will be caught because Bahamians don't know how to keep their mouth closed. Well, there again, Robin Hood is the next one. Now the problem with Robin Hood,
That's all.
the problem with Robin Hood is a large problem with Robin Hood is people didn't like Sandy. Said Sandy was bad for this country, and he says, okay, I'm going to do whatever I take to shut you down. So remember, he went in Robin Hood and he took out
All the computers.
all the computers and everything. Brought everything to a standstill. Now, I don't know whether he was paying customs on his goods that he brought in, but there was another problem here. Sandy one didn't own the place.
Sorry?
Leslie was involved with that too.
That's important. That's all.
And then not only that, you remember Grand Bahama Mills or whatever, they had bought Robin Hood or whatever, and then he had to buy it back. Things went, was just a mess. Okay, so let's move on, please, to our example. And so you'll see exactly how this will do. So in other words, as you can see, the calculations provided is very simple. Very simple. Okay? And so the question is now, so how do we track these goods? A little counting here, I don't know, so hopefully you understand accounting. When we have two sides, we have a credit side and we have a debit side. And so the first one is purchase goods on credit from our items, $22,800. Does everyone see that? Okay. And so we will debit the inventory for $20,000. Why? Because that's the goods we just purchased. That's asset to us, right? But we purchased it on credit, and so therefore we have a payable. So the creditor will be credited for $20,000. Do we agree? But we also now, as a result of purchasing these assets, we now owe the government some money. That's also a creditor for $2,800 to some extent. Okay, and how do we get to $2,800?
They didn't divide it.
They divided the 22,800 by the, or they multiply, I should say, sorry. But what they really should have done, and like how they do it, 1.4, I should say, 1 times 1.4, sorry, times, times 20, and what would you get? That should give you I should give you 2,800, I should say. Does everyone see that? 20,000 times the 1.14, that should give you 28, to the math. Okay? No, so we debited the VAT input account for 2,800. Is everyone with me? Okay. But there's a total creditor of 22,800, which includes the price for the inventory and the actual taxes itself. Okay? Now, second, our Adam pays 22,000 in full settlement of his account. And so, what do? Well, we will credit our cash account or our bank account for the 22,000. Agree? the creditor account will be debited for the 22,000, right? Now he received a discount of $800. Everyone see that? Okay, and so therefore his creditor will also be reduced by the amount of the discount if he paid less money. And then we have our VAT output.
Oh, they're separate. Okay.
Yeah, they're two separate.
No, because I saw discount received and output back. That's why I was wondering. I was about to ask you when you said that if they discount the VAT, then that means.
No. Okay. And so what is the discount that he received? The discount he received will be 800 times 14%, right? Which will give us the 98.25. No one brought the calculator to prove the calculations? Or more specifically times the 114. Ding, 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 ding. Which is the 800.
Yeah, but.
No.
That's what I.
14% divided by 1.14.
Divided.
You got to get that percentage first
And then you.
and then multiply it by the 800. In other words, we have 14 divided by 1.14 times the 800, and then that will give you the 98.25. And then you will have the 800 minus the 98.25, which will give you the 701.75. So, in working this out, you need to make sure you work this out first. Don't put the 800 in first. Okay? And so, there's two things here. Now remember, look at the guys. Remember that VAT is based on your sales price. And so, if he gives the customer a discount, it means that his prices decrease, which means his VAT has to also decrease. Okay? And so when you see the output for VAT, where you see it is decreasing by the 98.25. Okay? Okay, he reduced his goods by 800. Do we agree with that? So his good went down by $800. Do we agree?
Yes.
So there's a portion of this that relates to the VAT.
Right.
So therefore his VAT bill must be decreased as it relates to this portion, this $800 portion. And that amount is the 98.25, and so notice that the VAT output account is now credited. So note that we have two things. We have a VAT input and we have a VAT output. Okay. Anybody who doesn't understand that transaction? Let me go back through it. One, the guy, he bought some goods. Do we agree?
Yes.
The goods he bought was, including VAT, was $22,800. We debited the inventory account, which means that it's an asset. Okay? But first of all, let me say this. How many of you understand debit assets and liabilities?
Yeah.
You guys over there understand? You understand? Okay, so we good. Alright. Okay, and so therefore he has an asset in the inventory. He also has creditors, but he has two creditors. He has creditors in demand, the guy he bought the stuff from, agreed? And then he has creditors for the government. So we have two creditors. And so now, the other creditor, or the other account to account for it, means that he has a VAT, an input VAT of 2,800 in A. So the question is now, he is about to pay. And how much is he going to pay? He's going to pay 22,000, which means he's not paying the 22,800. Do we agree? So he's reduced his bill by $800. And reducing his bill by $800, it means now he must reduce his VAT. 14% of whatever that is. Agree? So now his VAT is now not as much. And so therefore, note that as with accounting, as you know, when we do our goods available for sale, what do we say? We say our purchases less or minus discount and allowances, and so note that's why they're putting it in the other account as a credit, okay? Because when you net them out, they will be netted out to show, in this instance, just the 2,200. Okay? The 800 is break up in two portions, the 701.75 and the 98.25. Two of those together will be the 800. Okay, moving on to another example, another transaction, I should say. Sold merchandise on credits to T-Tax, $22,914. The markup is 20% of the cost. And so, in this instance, we have a debtor. Next page. We have a debtor sales of 20,100. How do we get to 20,100? Then we have our VAT output of 2,800. So if you look to the middle of the page, can everyone go with me, please? The first thing we know is that, remember we said that when we buy in stuff now, sometimes we buy it including VAT or excluding VAT. So we need to determine what portion of it relates to the VAT. Do we agree? Okay. And so what portion of it will relate to VAT? The way they have it written, hopefully I will get it out now. You remember we said that the gross, if we want to get back to, say we want to get to VAT or net amount or whatever, we said we'll either multiply or we will divide. You recall that? And so therefore, we have our, if we say 14 divided by 1.4, I think that'll give us what? What's going to give us?
That's just the 30%.
Pardon?
Sorry, hold on. 0.12.
Yeah,
Well,
1.12.
Times the 9.14. Okay, which will give us a 2814. So this will give us 0.12 something something something. Do we agree?
Yeah.
Okay? And so we'll multiply the sales price by that. Okay? And sales price for that will give us the actual VAT that will be charged. Right? And in this case, the VAT is the 2,800. So now that we know the VAT, we take the total sales price and subtract the VAT, which will give us the net price of the goods itself. That is the price of the goods before the VAT, which will give us 20,100. Does everyone see that? Okay? Alright. I'll leave it there. Those two for now. So that's why. So we're recording our debtors as in 20,100, and then we have our VAT output, also a debtor for the 2,814. And then we have our sales, which is 20,100. We have a VAT output, which is 2,814. And then we have our inventory. In other words, the cost of the inventory, because why we now need to say how much did we pay for the goods that we have actually sold. Okay? And how much we paid for goods we actually sold. As some of you know, we can either use the cost method or we can use the sales method. Use the cost method, no, that's why they have the 20,100 times the 100 divided by the 1.2. And note that's why that's going to give us the 16,750, which is actually the cost of the goods that we have actually sold for 20,100. Okay. Okay. And so it means that these goods were in inventory at 16,750, right? Then we sold these goods for 16,700. We sold these goods and we must now take that out of the cost of goods sold. Okay? Moving on to the next one. T-tax paid 22,114 in full settlement of the account. And so we'll credit the bank account or the cash account for the 22,000. Now, there's some discounts that he received. Do we agree? And so the question is now we need to apportion the discounts by one, reducing his price and also reducing the VAT. Okay? And so the actual price was 22, I think it was 914. What he paid is 22,014, which gives us a difference of what? $900 in discount. Okay? And so the $900 in discount times the 14 divided by 114, in this case, will give us it should give us to 110, 53. We agree? And so that's the VAT related to discount. And so now we take the $900, that is the total discount, minus the VAT as it relates to that, which is 110.53, which brings us to 789.47. Okay? And note the various accounts will be debited by that amount that it was previously credited. That is reducing the price. Because remember now, once we sell the good, or once we pay for the good, we receive the discount price must also go along with it, right? Or the discount amount must also go along with that good. And so therefore we have to properly apportion that. A portion of it will go to the debtors, okay? A portion of it will go to discount allowed, and a portion of it will go to the VAT. Any questions on that? Let's go to another example then. Like I told you, the calculation for this is not the problem. It's what? It's going to be tracking and accounting for these items. That's going to be the problem. Okay, moving right along. And so, debtor, S. Sunny, debt of 11,400 must be written off as irrecoverable. So this is the problem here now. Because guess what? You sold the goods, which you probably would have previously paid VAT on, depending on where you are in the chain. You previously paid VAT on it, but now you never got your money. It's problems. And so, the debtor, we must reduce the debtor by 11,400. We must reduce the bad debt by the 10,000. Okay? And we must reduce the VAT by 1,400.
So
Okay.
when we reduce that to the 14, I mean, in the case
Go on before I say what I want to say.
sorry, this would be a case where Sunny's would be getting something back from the treasury, like from applying government debt. Correct?
Okay,
Or does he still have to pay the 14, although he lost all this?
he still has to pay the 14. Because note, as he write it off, right? Somebody got to pay for this. Now, let's move further and I'll come back to that. Okay? Now, so the actual amount for the 1,400, notice the actual full amount of the debt that's written off, which is 11,400, times 14 all over 114, which gives us 1,400. Now, this one here is very distinct, and then I'm going to come and I'm going to draw a reference to show you what's actually going to happen. The owner takes stock of his own, for his own use. In other words, there's really a sale that occurred, but he didn't pay for it. Okay? And so notice it was $1,140. So inventory and input tax is $1,104. And as he apportioned it out, it will be what?
$140.
100 and the drawings inventory will be what?
1140.
No, 1,000.
1,000.
And the input drawings is what? 140. Now, Mr. What's your name? No?
Oh, me.
Yeah. What's your name? Arna. If you look at the input VAT-A, do you see that? Drawings for what? $140. Do we see that? What balance is that, Mr. I didn't get you. Arna. What balance is that?
That's the Bible.
That's $140, but that's a credit, which means it's a payable. Okay? Now let's go back to the first one for the 1,400. Notice that's a debit, which means that's a what? It's a receivable. It's a debt. The government is their debtor in this regard. And so now they go to the government for their money.
Okay. So he does go back and ask for that.
Pardon?
So he does go and
He go back and he asks, tell them, say, give me this money back, because now he's recorded them in the debtor situation, in the receivable situation.
They can't just offset it on the bill.
Well, let's say this. We're dealing with isolated situations
Okay,
here in this example, right? But as we go through, you know, a host of examples, evidently it will net out. Okay, so he will reduce his taxes by this amount.
in this case. Yeah.
In this case. Alrighty. And so issue a credit card note to a debtor for damaged goods. $75. In this case, debtor allowance and VAT output $75,000. $75. The amount for the debtor is $65.79, and the amount for the VAT is $9.21. Does everyone understand how we get that? The 79. Okay, the 65.79 will be the 75 times the 14.1. Times the 14 divided by 114, which will give us the $9.21. $9.21 minus the 75, which will give us the $65.79. Does everyone see that? Okay, good. That's in the credit card situation. Yes, sir.
Sorry. So you assuming that all goods have 14%. Now suppose the data is a combination of 14% and exempt goods and whatever. Do you take an average rate?
No, you don't want to do that. I mean, one of the problems, any of you customer officer? No. Any customer officer? What happens is that, what I find is that what the customer officers do when you come through the airline, they just multiply all the other thing and they just multiply. They're not supposed to do that. They're just being lazy. But they're supposed to say, okay, these goods here, 45%, these goods here, 35%, these goods here are exempt. So what needs to happen is you need to go through this, and this is why we have our custom brokers. Okay? Now, when it comes to this, let's say in your system, right? Your system, you remember I said you'll have to update your system every year?
Yeah.
Your system will have all the various rates in it.
Well, okay.
Okay, so if it's a non-tax good, then it should have zero taxes attached to it. If it's a tax good, then it will have the various taxes attached to it.
So a debtor will have a combination of, I'm talking about a debtor, I have a combination of,
Yeah, for simplicity's sake, we just put
I mean,
it-
for the, yes,
yeah.
exactly, but in real life, we have to
In-
break
in
it
real
down.
life.
Yeah, okay, all right.
Yeah. Now, at the same time, mind you, for the most part, we'll have a high-end VAT and we'll have a low-end VAT.
Okay.
Are you lost, Miss Stam?
But I'm listening.
Okay, for the most part, everybody will not be charged the same VAT.
Right,
Okay? So depending on the actual industry you're in,
yeah, okay. Then, yes.
you'll have the various respective rates. Yeah. Okay. Okay. Now, for the sake of Miss Charlene, she said she is lost. So let's see how we can help her. Mind you, I asked if everyone understood, you know.
Yeah, pretty lost.
Pretty lost now. Pardon? Okay. Where do you want us to go through from, and then I can see, that's why
God, I have
can
to
give
go
you-
over it myself. That's all.
Okay. Well, I'll do this last example, and then I'll go back and do a total overall. The other ones is really journal entries in the back here, which we're not going to do, and then we have some examples, just trying to get back to the right answer. So we receive a credit note from a creditor for damaged goods returned for $148. Notice, in this instance, we have the creditor, which we will debit, which will reduce our creditor, agree? And then we have inventory, which here again, will reduce our inventory of 100. And then we have the VAT here again, whereas, okay, initially, when we sold the goods itself, we may have paid taxes on it or whatever, but now the creditor has bought it, and so now we have to put it back in the creditor, therefore increasing our creditor. For the most part, but let me give you just an overhaul, maybe meant verbally, of what actually happens. So, the key thing to remember is we have these accounts that are called VAT input and VAT output. Do we agree? Everyone with me here? Okay. Depending on where you are in the chain, that will determine whether you have VAT input and you have VAT output. If you were to go, Charlene, to the front of the page, the front of the handouts, we have VAT outputs, which is VAT paid on items purchased and can be what? Claimed back. Is everyone, you get it? If we go to VAT input, it's VAT on sales and what? Income, and must be paid over to SAR, or to the Treasury. It is VAT that you pay on all business expenses for which you have a tax invoice. It also relates to VAT that is paid on other goods and services bought or rented. Okay, so you got two directions here now. Now, let's go back to the first one where it says, it is VAT which your companies would charge on items which it sells. Okay. So, at the beginning, we have, you purchase goods. The key thing is when you purchase goods, what happens? Remember, you are in a VAT system now, right? So when goods are purchased, the goods that you are purchasing includes two things. It includes the price of the goods, and it includes the VAT. Is everyone with me? It includes the price of the goods, and it includes the VAT. Do we agree? Now, normally when we're talking about a company, that will involve, say, two accounts. Do we agree? You purchase the goods? Do we agree? And so therefore, it's going in inventory. The only question is now, you purchased the goods, did you buy the goods on credit, or did you pay cash for the goods? Because that will dictate where the other side is going to go. Okay. Are you with me, Charlie? So it's, you purchase the goods, So when you purchase, you have what is called inventory. Right? The question is, did you pay cash or did you buy on credit? Do we agree? In this inventory account, you can only account for the goods. But remember now, when you purchase the goods, it includes two things. It includes the cost of the goods plus VAT, right? Which means these must be accounted for separately. Do we agree? So when we go, for instance, to the first example, let's look at that. Let's see. The inventory account is debited. How much is it debited for? Well, first of all, okay, he purchased goods on credit, and the amount for what he purchased was $22,800. Do we agree with that? That's what? The cost of the good plus VAT. Is everyone with me? Okay, good. Cost of the goods plus VAT. Now, the question is, how much is the cost of the goods and how much is VAT? Because the two of them together is what? $28,800. Do we agree? Okay, fine. The company must account for its goods. And remember now, Miss Charlene, you're a lawyer, right? What is the number one rule with regards to clients' funds?
Keep it separate.
No commingling.
No commingling.
Do we agree? You cannot commingle the government money with your money either. Agree? So you must account for the government stuff separate. That's where that's going to go in the VAT. But it was only one purchase, but that purchase now needs to be broken down. Say this another way, Charlene. You charge your client $8,000. No, you charge your client $2,000, and you are to make a payment for your client of $8,000, and so your clients give you $10,000. Do you agree? $2,000 of that is going to go into Charlene's account. That's Charlene money, right? The other $8,000 is going to go into the escrow account. Okay? The VAT is the escrow account. That makes sense? Okay.
For lawyers. That makes more sense to me now.
Okay, lawyers.
If you're talking escrow account, yes.
Okay, so the VAT is the escrow account.
Okay.
Okay. So let's look at it like this. So the inventory is the client account, which is $20,000, which is going to be debited. Remember, debits are assets. Do we agree? Okay. And then we have the creditor, which is comprising of two accounts, the $20,000 and the $8,000. In other words, that's the $10,000 bill we're talking about there. So that includes, if the client comes back to you and say, I want my money, what I give you. I don't want to pay you for your services and I don't want to pay you for escrow. This is that account. You have to give them back all their money. Okay? Let's say you said, the client say, well, you can hold this and I have 5 days in which to make my mind up whether we're going to do this, right? But you tell him to do the transaction, it's $6,000, it's $2,000. You 5 days. It's still ain't your money yet. Do you agree? So that's the creditor to you until that time is passed and you have done the transaction. So now you have this VAT here of $2,800 in terms of what? Accounting for the government itself. Now let me say how that goes. We have it there as a debit, but you know it's also in the credit. You have an escrow account. Where's that escrow account? When you account for your escrow account, Charlene, you put the people money in the bank. Do you agree? But you create a liability to say that's an amount outstanding, but it's you're still responsible for that cash, which is assets. Do you get the idea now? So that's why we still have to do what? You remember for every debit there's a corresponding credit, and for every credit there's a corresponding debit. You can't just say, okay, this is only a creditor. Why? One, you are the custodian of that account. Let me say this another way. If the $10,000 is stolen from you, Charlene, who's responsible for that money? You are. So that's an asset that you have. Do you agree? And so that's why, notice the VAT, we are still debiting the VAT, but that's the VAT input. Okay? So that's an asset that you are the custodian for, even though it's not your money, but you have accounted for it as a liability. If you want to look at it, how much money out of that does Charlene owe? There's a DR of $2,800. There's a CR of $2,800. The net amount is Charlene, which is 0. In other words, let me say this to you. There's cash from your client of $2,800. There's a liability that you've created of $2,800. Anything left, like the preacher say, when you throw the money up, God, what left is yours, will come down his mind. Okay? Ain't nothing left. It's 0. Does it make sense now? Okay. But we are just merely accounting for it. Remember now, we accounted for the inventory, which is ours, in an inventory account. But we must account for the government on in an input VAT account, which is the government on. That's still asset. Because if that money gets stolen, you sit on the hook for that. That has worked. You can't say it doesn't have any worth. It's an asset. Just not yours. Okay? And so, okay, so you're with me there. So the question is now, how did we determine what is the VAT? Okay, you remember we said two things. The VAT either comes in the gross amount or it comes in the net amount. Is everyone with me? Okay, so we're trying to find out, okay, not the VAT, I should say the sales. We're trying to find out how much is VAT. We've determined VAT to be $2,800 by saying the gross price, do we agree? Divided by, multiplied by the product of 14 divided by 1/4. Okay, the two of them. And in this case, this will give us 2,800. Okay? Now we could very well go and say, okay, what is the gross price? What is the net price? And then take it away. Agree? We can say, what is the gross price? What is the net price? And then take it away. Okay, so is everyone, Charlene, are you with me on the first transaction? Okay, give me 1 second.
Yeah, when he broke it down like that, it's all
Okay,
my language.
let me say this to you. I think another thing that may be confusing you guys, watch this, Charlene. If you go back to the first, example I showed you, they have taken a shortcut here. We have what is called net, and we have what is called gross. Do we agree? Okay? If we want to find the gross, what do we take? We take the net times the rate. Do we agree?
Yeah.
And that will give us our gross. Do we agree?
Right.
Oh, so we should say VAT. But if we want to find, excuse me. Let me say this differently. We take the sales price times the rate, and that will give us our gross. Do we agree?
Yeah.
Does everyone agree with me now? But if we want to get to the net, we take the gross and divide it by the rate. Oh no, 1 plus the rate. Do we agree? Okay. So, Charlene, stick with me now. Let's say it's 2,800. How did we get to 2,800? Well, we know that the good itself cost what? Should I say the price of the good? Let me say the price. Let me not say cost. The price was what? 20,000. Not 20.
22,800.
How we change this?
That was the total purchase.
22,800, right?
Yeah.
What do we need to do is now get to the net. So the net will be equal to 22,800 divided by 1.14. This will give us 20,000. Okay? It's the net. So the price
It's the entry.
minus the net, which will give us the 2,800.
I understand that. It's
Okay.
when you were going over the examples, it's the entries that I was getting confused on.
The entry. Okay,
That
so you
part I
quoted
get.
us now.
Yeah, it's just that, with some of the examples and the entries is just trying to understand.
So we good with entry one.
To get the,
Example
Yeah,
one.
that's fine. That's
Okay.
an easy one.
to get the 2,800, you could have taken the 20,000 and multiplied by 0.14, and that would give you 2,800.
Yeah, I could do that also, but we didn't, that's not what we paid for it. We paid
But I need to
22,800.
calculate it back.
Yeah, but we needed to determine, you remember that, we needed to determine how much of it should have gone in inventory because the VAT was included in the price. So we need to now break it out. We knew what the VAT rate was, we just didn't know what the VAT amount was. Okay? So let's go to, okay, example number 2. R. Adams, 22,000 in full settlement on the account. Okay. So, when you pay for these goods now, Charlene, what you gonna pay with? Cash, right? And the cash is gonna come from the bank. Do we agree with that? And so therefore, to decrease the bank account, what must we do? Credit it. And so therefore, we're crediting it for the 22,000. Note that the amount that they actually paid, when they actually purchased the good, they purchased the good for 22,800. Now this is one of those things where, okay, if you pay within 30 days, you take 2% discount or whatever, okay? And so this is one of those situations. So they paid the 22,000. Okay, fine. So that's the bank account. That's a new account. Haven't paid that. If we look at our creditor, Charlene, our creditor had a credit balance of 20,000 and 2,800. If we go down to the second example now, note that we've debited the creditor for the 22,000, which means that is going to reduce the creditor account. But we've also debited for the discount because we now need to account for that discount. Agree? That the discount must follow the products for which it relates. Right? And so therefore, we're going to debit that account. But we must also account for that account, for that discount. In accounting for that discount, the question is now, it's $800 in discount. Do we agree? Okay, everyone agrees $800 in discount, right?
Yep.
If there was no VAT, we will just say discount, $800. We know that included in this discount is what? VAT. So we must now break this in what?
It's a two.
In two. In VAT and true discount. Do we agree? So we must now say, okay, how do we determine the amount that is VAT? Once we determine the amount that is VAT, it's like kind of what left is throw the money up. God would go up there as yours would come down as mine. Whatever left is the discount itself.
I have a question.
Yes,
How
sir.
come we didn't account for the 2,000, because we paid 20,000, 2,000
How
now?
come we didn't account for what?
Yeah, the 2,000, we didn't break it out, like how are we breaking out the discount?
Because what we did, okay, let me say this. What's going to happen is this. There was a 22,000 that was paid for in totality, right? The question is now, okay, how much of that is going to be related to VAT? And how much of that is going to be related to the goods itself? What they will do is you have the 22,000, right? The 22,000 is paying for two things. It's paying for the goods and it's paying for VAT. Do we agree? We know VAT is what? 2,800. Do we agree? But we know that the actual goods itself that we got the discount on is 800. But a portion of that is VAT, which we've determined to be 98.25. Do we agree? And so we must now reduce our VAT by 98.25. And the difference of this would be VAT, and the difference goes to this guy here. Okay? But it was one check. See, when the check was written, they say this for this and this for this, but they'll have to work it out. Okay? Alright. And so we've determined that the portion of the $800 that they got the discount on, so they, you remember now, like you said, VAT is based on what? Consumption or sales. If the sales go down, the VAT has to go down. Okay? And so therefore, we now must account for the discount. You remember now, if we credited if we debited the creditors for discount, we must have a credit. Do we agree? The only problem is the credit is going to be breakdown in two portions. Okay. Is everyone with me now? Charlotte, you with me now? For example number 2. Okay. Let's now go, let's go to transaction number 3. Sold merchandise on credit to T tax for $22,914. And I think this is where the problem may begin. The markup is 20% on costs. Okay. What did we do? We sold merchandise. Do we agree? And so if we sold merchandise, it means that we have a sales. Do we agree? And we have a debtor. We didn't buy it for cash, right? No, we didn't buy it for cash, so we have a debtor. So the question we must ask ourselves is, Charlene, how much of this $22,914 is VAT? Agree? How much of this $22,914 is VAT? Okay. Now,
So we are point now, we now selling the final consumer.
yeah.
Yeah.
And so, let me see how, I think this may be the problem here. So we have, okay, good. We said that there's a 20% markup. Do we agree? On the goods itself. Do we agree? The cost of the goods is how much? $16,750. $60,750 times 1.2, which includes the markup, will give us $20,100. Okay, does everyone see that?
No.
I'm on page,
I know, 6 and
7.
7. Yeah,
page 7 at the top.
right.
We say that the sales is $20,100.
Right.
We say the VAT is $2,814.
840.
Do you get it done? So there are several ways that we can determine that. Okay? We can, 1, decide, okay, what is the cost of our goods? Okay? 2, we can determine, okay, what is the gross amount of our goods and determine how much of that is actually how much of that is VAT. Okay? Or 3, we can determine what is the amount of the actual costs of these goods. Yes, ma'am.
No, I was thinking, I was trying to figure out why it was 22.9 and then at the end, inventory was only 60, so it's the sales, the inventory itself, let me see if I understand it. The inventory was 16,750. The sales was 20, that,
Okay, do the 60, you have a calculator?
no.
No, calculator, please. Have a calculator.
Because I'm trying to, how did we get the 2814 back on 22,914?
Do 16,750. 16,750 times 1.2. What you got?
Okay, 20,100.
Okay, now go back to the front page at the bottom. Read, what does it read?
Okay, I got it.
You got it now? Shannon, you got what we're dealing with?
Yeah. It was 22.9, yeah. That's what I was thinking.
Okay. All right. And so that 22.9 includes what? The sales price of the goods and the VAT. Do we agree with that? So now, like David said, we're about to approach the consumer or reaching the consumer level. And so the question is now, okay, how are we going to deal with these accounts? How are we going to determine how much is VAT? How are we going to determine what is the cost of the goods itself? Okay, or the selling price of the goods itself that we sold. And then how do we determine what the actual cost of the goods is what we actually sold? Because we now need to take the cost of the goods out of inventory, we need to record the debtor, and we need to record that. Is everyone with me? Okay, good. And so, the first thing we know is this. Okay. The first thing we know is this. If we want to determine, it's several ways. What they do here, and they do it as a shortcut, as I said, but if you also all understood it, it's fine. I'll just go on and explain. If we wanted, let me ask you this. If we wanted to determine the cost of the goods that we, not the cost of the goods, the selling price of the goods that we sold, what would we do? The selling price of the goods that we sold for $22,914. How would we find the selling price?
Finding the VAT first.
Without finding the VAT first, because that may be part of the confusion here.
We
have to divide the cost.
We'll divide what?
The gross sales price, the gross
Divide the
purchase
gross
price.
sales price
Gross purchase price.
by what? By 1
Plus.
point or plus 1/4. You get the idea? And that will give us what? And what is that?
The net.
And how much is that?
That's the 2100.
That's the 20,100. Do we agree? So we know that that's the selling price of the goods itself, right? The total amount that was actually got was how much? 22,914. Do we agree? Plus the selling price of the goods itself, and this should come to 28.
Minus now. Minus.
20,000. Sorry,
Confusing.
minus it should be. Sorry,
Yeah,
my bad.
20.
Minus.
Right.
This should come to that.
Right.
Do you get that? Now the way they do it here, they just do it as a shortcut measure. Okay, does that make sense now? So in other words, we are recording, so when we record now, we record the sales, agree? And we record the VAT itself. The sales being the 20,100, and the VAT being what?
284.
2814, for a total of 22,914. Does everyone get that? Okay? All right. And so now, okay, let's continue to go on. So we have sales for the debtor of 20,100, but we also have another debtor of $2,801. Now let me see if I can explain this more.
Richard, that would be good.
Yeah.
20,100 minus 16,750, that's the gross profit that we're not even looking at, right?
But we're not interested in gross
That's what I'm
profit at
saying,
this point.
yeah, that's what I'm saying, so we're excluding that. That part, looking at the crazy.
The 20,000 minus the 16 will be the markup itself,
Right, yeah.
but that should be 20%.
Yeah, right, okay, I mean, we're not recording out in
No.
this exercise.
No,
Okay.
because what happens is, Dave, as you know, when we put it through in the financial statements, it will flow throughout in the gross profit.
Right, okay.
Because we'll have our sales, right, less our cost of goods sold, gross profit, and so the profits will be in
Yeah,
there.
the whole part of the exercise is exclude that gross profit.
Yeah.
Right,
Yeah, because remember now, the VAT is not on gross profit.
right, right.
It's on what? The sales of the good itself.
Yeah.
Okay? And so the question is now, let me say this, see how I can say this another way. So we're now at this exercise here. Right? When we got the money, we got 22,000, how much? 914. Do we agree?
Yeah.
Okay. The sales amount is, which we credited, as we know, revenue, which is 20,100. Do we agree? Note, however, we have VAT output in this instance of 2,814. Now, let me say this to you. Note, in our previous example, we had VAT input. Do we agree? Because we were further in the chain. Do we agree? But notice the VAT input was both debited and credited. You remember? Why? Because a portion of it is what you owe the government, and then the other one was what you were actually going to get back. The net amount was what was left for you. Now we have the output because we're now on to the final consumer. Right? Now note that the VAT output is a credit. Which means what? We owe some people money, and those people are who? The government. Okay? And so, moving right on. We must also, for instance, where we have the inventory, if we cover that up, we don't even have to worry about that. We're only accounting for that from the company's perspective to say, you know what, this is how many goods went out. Okay? So we're going to reduce our inventory by the 16,750. Okay? And we're going to increase our cost of sale by the 16,107. Okay? Is everyone with me here? Charlotte, you with me? Mm-hmm. Okay. And so we're now at that point. So at this point, what exists now? Note that we sold merchandise, do we agree? But we have what outstanding? The only thing we have outstanding right now is what? Monies that we haven't paid the government as yet, which is the 2,814. But let's go to the next example. T-Tax paid us 22,014. Is everyone with me? So you sold these goods, do we agree? You now need to do what? Collect your money, okay? So when you collect your money, what do you do when you collect your money? Well, you must reduce your debtors by the amount of money you collected. Do we agree? Okay. And so in doing that, notice we previously had debtors in there for the 20,100 and the 2,814. We're going to credit that account, which is 22,014, but we're also going to reduce that account by 900. Okay, how many of you understood accounting? All of you said you understood accounting. Charlie, let me put you on the spot.
No.
Okay. When we let's think about an asset, right? You had this asset for a little while. If the asset was in the business, the asset would have been depreciated. Do we agree? You depreciate an asset. So when you depreciate this asset over time, you have an accumulated depreciation. When you sell that asset, what do you do with the accumulated depreciation? You don't write it off, you move it off the books. Do we agree? No, you may have other asset in accumulated depreciation, right? But the accumulated depreciation that relates to that asset needs to go with that asset. Do we agree? Whatever it is, it needs to go with that asset. Okay? And then, for those of you who are not accounting, what really happens is that we will have the asset, the cost of the asset, we count it in cost, and then we have the accumulated depreciation. When we sell the asset, we move it in what is called a disposal of asset, where you move the cost into the disposal, you move the accumulated depreciation into the disposal, and then you determine if there's any cash or whatever paid, or any cash or whatever received, whatever the amount is, depending on if it's debit and credit, that will tell you if there's a gain or loss. Okay? Now, this $900 difference, which is the difference between the 22,914 and the 22,014 that they have actually paid, is 900. We can't leave that on the books. Do we agree? That must go with the asset that was paid for because they said they gave us a discount. In other words, let me say this to you. Very rarely it happened, but let's say you owe the bank $9,000. The bank tells you, hey, guess what? If you pay me $8,500, that will clear the account. When you're going to give the bank $8,500, if you look at it, you may say you have $500 left. But do you? No.
You shouldn't.
You shouldn't. Which means that $500 go with the $8,500 that you actually paid the bank, right? This $900 relates to the products and you got a discount for that, right? So this must also go, right? So they will write this off as a discount. So that will bring the debtors now to zero. The bank account, or the debtors, the bank account will be debited for the 22,014. The discount allowed and the VAT input will split the difference of the $900. Is everyone with me? Okay? And so therefore, $789.47 will go to the discount allowed, $110.53 will go to the VAT. Now, how do we determine how much goes to the discount? Well, the best thing for us to do is determine how much of that $900 relates to VAT. Remember now, VAT is based on an amount. It's a percentage of an amount, right? This was $900 out of the total sales, do we agree? So a portion of that is VAT, and the amount that we determine is VAT, so we say it's 110. So the 900 minus 110.53 leaves the $789.47. Does everyone understand that? Okay, good. So that's that. And so now we have these written off amounts by this guy. So you write off your debtor, but if you write off the debtor, do you still owe the government on that? You remember, it's only based on what? What you receive. You didn't receive it, so you shouldn't pay it. Okay? And so as a result, what does it mean? Note that the debtor is $1,400 in VAT. That was what must we do to that? We must write it off. Or get it back from the government, net it out against the other taxes. Remember, there's debits and then there are credits. The credits will be from the output perspective, which you owe the government. Okay? But in this instance, we're talking about input right now. Okay. Alrighty, and then there's drawings. Here again, drawings will be debited. Remember, drawings will be debited because drawings is like an expense. And then we have our inventory, which must be reduced by the drawings. And then we have our VAT, which we must pay on the drawings, which is a credit of $140. And then we have, what time is it? Then we have our credit card issue where we have our debtors for $75. Then we have we must determine, okay, how much of this relates to the debtor allowance and how much of this relates to the VAT. We normally, here again, we'll use the VAT amount to determine that because we'll just subtract it. We said, for every debit, there's a corresponding credit, and these are the corresponding credit. In other words, we will create debtor of $65.79, and we'll create a VAT output of $9.21, which is really the 75 times the 0.14. And then we see the credit note from the creditor for damaged goods. It is a credit note. We're going to reduce our inventory by this amount. And our VAT, here again now, we'll have a credit as in the input itself. So we're putting it back. And so therefore, or increasing our amount. And so therefore, the creditor, as we said, will be 114, which will credit it. Remember, when we initially issued it, it would have been a credit, so we're going to now debit that because we got it back, right? Okay? And then we have our inventory. That is also going to be reduced. Okay? And then we have, because the goods are damaged. They're not good. Okay? And then we have, like I said, the VAT for $14. I'm hoping that's better, Charlotte. Like I said, you remember my prefix at the beginning of it was, do you understand accounting? Because it really would require knowledge in accounting. The actual calculation for the VAT, it's going to be simplistic. It's accounting for the VAT that's the problem here, and that's one of the reasons why you see these guys screaming, because you're going to need to hire specialist staff to do this, which means there's an extra cost in your business.
means some people gotta see their books.
Which means
Some people have some more eyes that will be on their books.
when more eyes will be on it, the government. And you can't do any rigmarole, right? Because here's what happens. If you don't have it calculated correctly, they will calculate it for you, and you won't like that.
They being
The government, they will tell you how much you owe, and you won't like that. And then they're going to be charging you late fees or whatever. Yeah. Okay. Any questions on that? No.
This is copyrighted, can we use this and explain to other people?
That's not copyrighted. No. No, not at all. Not at all. Now, like I said, in the back here, I have some questions for you that I would like you to try. We have question 1, question 2, question 3. For instance, we have the value of the goods, we have the VAT, so what should the total output be? Right? Should be fair enough for you guys. I can do a couple if you want me to. Then we have the invoice total price. What is the value of the goods purchased and what is the VAT? Get the idea?
You wanted to email you these answers? Or you want?
If you look further, there's the solutions. On page 16.
We'll try to put it before we have solutions.
Okay. Alrighty, and like I said, I guess as Gil probably know, the class would have been a short class because in terms of the calculation, that's it. Okay. But if you have any questions, please either call me or send me an email or, something to that effect. Now, if you, it's better to send me an email because if you like send me a text, I really don't type that fast to answer questions because sometimes you can be long-winded. Okay. All right. But the key thing is what I will advise you guys to pay attention on is to try to pay attention on those. Try to focus on the input, output. You see what I'm saying? Try to pay attention to those because that's where the point of complication comes. The others information that is the inventory account, the debtor account, the bank account, the cost of goods sold, they're just basic accounting. Okay? It's how you deal with when it's an input and when is it an output. When do you owe the government versus when you don't owe the government. Okay? And so that's it.
You own the government, when you receive it from them, then you pass it on to them.
Yeah, whenever you've gotten paid, you owe the government.
So then when you sell something, you receive it from them.
You receive it for the government and you are the custodian for the government.
Like, I need to go pull that accounting book we use when it's not got, I gotta go find. You know how long we did accounting in law school? Years ago, we had to do an accounting and technology course. And I was just sitting here dreading. It's like, I can't believe I'm going through this again. I'm like, shoot me. We enjoyed the course because of how not that we enjoyed the course.
Our student was lucky, very exciting.
She was good. I mean, she was good, but not that we liked it. Lawyers don't like numbers.
I'm not sure about that.
No, when we collect it now, we don't mind that now, but those journal entries and stuff, no. We just show us it's coming in.
I know lawyers like 15%.
10%, 2%.
They numbers to me.
We like to see that you can show us the money coming in, but the journal entries and stuff, we pay people to do that.
Yeah. You just hire people to do that for you.
Just like that, easy, sir.
Mr. Wilson, agree, let's do my seat.
I'll have to see what McGill says.
You know, these government people, they always have a reason why they can't.
So I don't know,
That can be a challenge.
I'll talk to McGill and see what he said.
See, maybe like over maybe like a final exam type thing.
But as a matter of fact, that's something that he and I had to discuss, because when he was in Ireland, he called me and I had to send him my CV. Because I think they were working out what the exam is supposed to be, right?
No, you really need a sample of it.
Yeah.
Right, this is a lot of stuff.
It is.
And we need to know what all is on.
Yeah.
Take home.
So if we have to see, come to you.
Yeah, we really appreciate that.
Okay, there.
Myself, wait, before I go back at this. I need that wine. What? Jeez, go get my combo.
It's only actually.
So I need to ask the tutoring from Joya.
When you go over it, you'll understand it.
Yeah, I know, it's just that the journal entries is what, so
Yeah,
through me, it's like,
when you go
how
over
to
it,
get there,
okay.
yeah.
No, you know what happened? Honestly, I believe. You're so busy taking the notes, if you just follow along.
Well, see, when I really have to take notes and then I go back. Yeah, so I think I did miss some stuff by not listening.
So they know how to be sure today.
That's why they brought it
It's
in.
the middle, right?
That's what they wrote just
Don't know.
I know, it was to the end, but.
No, it isn't the end. I don't like.
Unless people make me nail them from the city.
Hey.
To me, it's the nails, right?
They didn't count, how many people?
Pardon? You see that? I thought they was gonna let me teach, I thought they were really gonna let me teach the, trust accountant.
That would've been good.
Because the thing is,
That would've been good if you did.
the woman who taught, she used my information.
Oh, she did?
That was your stuff?
Yes.
So,
I did give it into McGill.
You know what, I never got it via email, you know. Did anyone get it by email?
See, she should have been teaching it.
I
because it's
never
accounting.
got the email.
And, you know, I've been teaching that now for the last 14 years.
Apparently Miss Archer's stuff was his stuff.
Trust accounting?
we didn't have numbers in that trust.
No, we didn't have any.
You didn't have any numbers?
No, it was just,
It was just.
well, I never got it via email. Did anyone
So she
get it
just
by
did
email?
trust law, so she didn't talk
just
about
gave
the,
us
she didn't do the DNI and all of that?
The what?
She didn't do simple trust and complex trust?
No.
But that wasn't from a tax perspective.
Maybe she didn't understand that. Maybe she took it out.
We dealt with the formation of trust.
It was more theory.
The fiduciary responsibility, the settler. We
No,
dealt with all of
y'all
that.
didn't do tax for trust in state then? That's what,
Yes,
that
we
was.
did that. We did some of that.
We didn't have any numbers.
We didn't have any numbers. It was just
You
theory.
can't have, if you can't
It was
have
just
taxes,
theory.
okay, let me say this to you. You can't have taxes for trust in the state if you're not calculating DNI.
No, we ain't do
You're
nothing.
not doing.
Trust
if
me,
you
I
don't know
remember that because somebody
What's gonna be the exemption
It
of
was given us that
for the simple, and then what is for the complex,
No, we
and
didn't
then
do that.
you need to know,
We didn't.
We ain't do none of that.
they have what is called administrative
Thank God.
fees, right? Yes, sir.
No, we didn't do any of that.
Yes.
We didn't do any calculation.
So you can see, what happened is that they have 3 tiers of information in terms of what you should calculate first to determine what your taxes are actually going to be.
We didn't do any of
See,
that.
that was the big exam.
So I don't know, well, it depends on what they put in it, but maybe, it says, McGill told me she was gonna use that, but I think what happened, I'll tell you what happened. I said she came in here the first week and then class was short.
Yes, it was. Yes, it was.
Now, when she went home, she realized she didn't really understand that, and so she decided to go from a different perspective.
Oh, because it's accounting.
Yes, you have to know what you're talking about, and then there's some words in there, like when I did the international, where I had to go back and explain. There are things in there she would have to go back to explain. And she didn't even have the text to even look it up.
Look it up, right. Because if you have the text, you could always
But you know, even if you have the text and you look it up, you still really gotta
Start
understand
accounting, yeah.
it to be able to explain it.
Yeah, of course.
Because inside the last trust lecture that she had, there was a concept that she was trying to explain to me, because I'm a lawyer, I don't understand trust models, and I saw the book that she was, the magazine article that she took it from, and I was trying to get some more, I think it was called a PWT or something, or PCT or something like that. I'm sorry, I'll have to look inside my notes and ask you about what it means,
Okay.
but I didn't understand it at all. But it was no numbers in what she taught.
No, she should have been numbers.
Yeah, Terry, even the minister, I'm sure you would have presented that better, because just the fundamentals, we're sitting there going like,
What's going to be scary is that when we go there and we know only the basics and the real world is
Well,
what
that's
you
what-
would have
yeah.
taught us, and we don't know, we're still not paying all this money, and we're still not prepared for what really is out there. That's the scary thing. And so we're being shortchanged because we're paying to learn this.
Because and mind you, for you lawyers, believe you me, let me tell you what's gonna happen. You guys gonna get a lot of work.
We are
Because
gonna
a
get-
lot of people government gonna be taking a lot of people to court. See, the government just can't come and take your stuff. They're
Right.
gonna have to represent people
oh yeah.
in.
But we have to understand.
Oh, you mean the
how
lawyers?
this thing
The lawyers.
works. Yeah.
The lawyers can make money, the accountants can make money, and anyone who decide they're gonna have a private business
Yeah.
can make money, but the lawyers gonna make the most money.
Of what?
Private,
Wait a minute.
like private.
From take people who the government gonna be taking to court.
Oh, yeah.
Because the government's gonna be taking people to court for their money. Believe you me.
Oh, yes. When the auditors go in?
The government is gonna be taking people to court.
Yeah,
So,
people
you know, one of
get on
the
the
things
court.
you need to start doing is positioning yourself as a VAT expert lawyer.
Yes.
What else? In addition to this, what else do you need to know? I mean, like, law probably just go over there. and-
Well, it's just one, understand the legislation. When he come and explain, he's gonna summarize the legislation. Then you need to go and read the legislation. The thing is that it's only, like I said, it's only in draft form. It's not in its final stage.
So if you read now, it doesn't make sense. That's why I was saying I wouldn't do it.
So
But then they say it on the
understand the
exam.
legislation, then understand the quantitative element of. So when they start talking about this and they supposed to do this, then you understand what language they're speaking.
So they understand this.
Understand all of this, yes.
Yeah.
Because then they can start to, because figures can start showing up.
Right.
Yeah.
Oh, Jesus.
We can do this, Shaw.
Yeah, I just gotta go back and find my book, which I threw away.
We could do this.
No, but what we need to do is ask Miguel exactly if we're having any calculations on the
Yes,
on the
we
trust
are.
part of this exam.
We are.
Because if we're not, then it's on us now to look for the information ourselves
Right.
or put demand on him.
What you need to do is say, well, if we having calculations, listen here, when the lady lectured us, she didn't give us no calculations.
We didn't get any.
So either you're gonna give us or you're gonna take that part of the exam.
Either you take the part of the exam, or you need to extend the program to include the calculation.
Right.
One of-
Exactly.
Now, the question, one of the things they need to be very careful of is start taking information out. Because when they take information out, it waters down the program.
Right.
So people are very, very skeptical
Skeptical
about
of taking
that.
it up, right.
But the problem is, they're feeling their way through. This is,
They what?
It's kind of like a trial.
let me be careful, as I know this recording.
Just turn it off.
I don't even know how to
Well,
turn
look
this
at
off.
This
Let's
is
pull
new
it
to
out?
them as well.
Yeah.
Let me put it like that. This is new to them as well, so it's not.
Press
what
stop,
you-
don't.
I just
No,
pull it
that's
out.
people's machine. It's full of
I
butter.
trying to see what
And
we
I
got
think you
from
stop the
here.
battery anyway.
Not even that.
But I think this is speaker here, so and the speaker's not in.
I pull them out, thing, so I know what I do.
No, but I really think that they just.
Yeah,
It's the first time of the program, so it's kind of not.
I think it's still recording.
Yeah, they'll
Yeah,
It's saying it's still recording. It look like it's still the battery may kick in.
Would be more structured. probably.
Yeah, yeah.
Because we didn't even have a cost, and I know that you said it's kind of difficult to pull, to have one book that covers all modules.